Salt, SIVB. How are you trading it? VWAP.
Oh, I was doing something silly like I never traded before in my life, trying to pick a bottom. And here I was doing some deep dive analysis into a bank that I had no idea it existed up until yesterday. But there I was saying, "Oh, it can't break 150, can it?" And there it went, breaking 150. So I was looking at charts going back. I gotta say, I looked at a 20-year chart on this name. And again, when I started looking at those longer term charts, this is not a bank. Banks don't usually rally from 116 bucks to 760. It looks like a tech stock, looks like Zoom's chart or Roku's chart. So once I started looking at that, I was like, you know what? This could easily break the 150 and then possibly go down to the 129. And I said, if this happens to break 129, there's no support to 65. And here we are at 65. I can't believe this is happening, but it's a lesson into stop breaking trend. If the stock wants to go to zero, just ride it to zero. I got caught up trying to play some bounces on it, and man, did I waste my time and waste my money. And this morning I came in, I was like, enough of that. I'm not going to be joining. I'm not going to try to find a bottom on a stock that legitimately could be at zero today. So when it broke VWAP, we just shorted it again. There's the VWAP break at 63. I didn't get short till this break of the pre-market range. That's 56 bucks. 56 got us down to 40. That's 16 points before we even got on the show. So now the stock's halted. They just took our toy away from us. Who knows if it's going to even come out of the halt? But while we're waiting for it to come out of the halt, the other lunatic stock starts to rip higher. Look at this move. We just bought SI at $3.15, banging it out at $3.50, almost went to $4 already. So, man, there's a lot of action going on. And if you're not trading with us pre-market, what are you guys doing? We're already like 6 trades already. Guys, you got to get a better platform if you don't have pre-market trading. If you don't have pre-market trading, you got to get it, because on days like this, you are sitting pretty even before the bell rings. And now we got money to play bombshells, no bombshells, and options and lottos. We're having the best morning already. Fantastic stuff.
Absolutely. It was, that basically took the whole market down yesterday, Silicon Valley Bank. We were going to be super range bound and just zhoof. That thing started to fall. And I was like, did some news hit? And I'm looking, there's no news. And then next thing you know, we're down 70 handles. Boss, this thing caused volume profile breaks everywhere. I can't imagine. I mean, is there anything below a thin zone? This thing is so low. Is there a thinner zone, or is there a dead zone for a stock? What are you seeing here on its volume profile?
Dead
Marco,
zone.
let me show this to you. We had a gap below the value area, and that's why when Kenny was saying there was just no way you can buy this stock because it went straight down, that's because we did have that breakdown with the value area. Value area breakdown, point of control breakdown in this thin zone. Mark, you can see I'm in the middle of the woods. I'm going to leave this one for the bears. They can have it. I'm not touching it.
I don't blame you. I wouldn't. All right. So Garrett, we've got Silvergate, we've got Silicon Valley Bank. All right. Now, a little bank in Silicon Valley doesn't send the S&P having problems, right? If this is Brookfield Community Bank in beautiful Brookfield, Illinois, home of the Brookfield Zoo, this doesn't cause a complete market meltdown. But the reason why is there's got to be some fears that this could pollute into other banks. There's hidden exposure that then could cascade, right? Because Silicon Valley Bank is small, but hey, it's doing big business with some bigger banks, right? And those bigger banks, they're still not big enough to take a total loss here. Then, that bank is banking with Fifth Third or Comerica, and wait, the next thing you know, we've got a banking problem, right? That's I assume the fear. Now, explain why that is an unfounded, or maybe it is.
Well, Silicon Valley Bank isn't exactly tiny. I mean, I believe that it wasn't long ago that this was at least a $10 billion bank. So there's size there. And also this is the bank of venture capital. So you've got Peter Thiel out there right now telling everybody to pull their assets from Silicon Valley Bank. And you got Bill Ackman now saying that it needs to be bailed out. And who knows if he's net short on something or he's long on something. Last time we heard from him, he was shorting the S&P 500 and telling everybody that hell was coming. The key thing here, I believe, is this kind of narrative which is building, and it's around the community banks. It's about those smaller banks, Mark, the banks that took a lot of the deposits, bought 1.5% T-bills, and are now forced to pay their depositors more capital. Within the community banking sector, I was talking to Tim about this, that during the Acquire Be Acquired conference out in Phoenix a couple of weeks ago, that this was a topic of conversation. But the general consensus was that the community banks and the banks were not going to sell their assets. They were not going to sell these bonds at a loss. They would just simply hold them. They could generate some capital. They just don't loan money out. They don't take their deposits and build their business. So they may have a couple of quarters of weakening return on earnings or weakening return on assets, but they're not going to implode and effectively go under. This issue within Silicon Valley Bank, I think, is a bigger story about the state of venture capital here in the United States. I just received an email last night from some founders who were up in New York. It was pushed to me, and I was reading through it, and it was effectively telling everybody in the VC space in certain places around the country, pull every line of credit you have, start firing people, get as nimble as you possibly can, and survive. Survive for the next 12 to 18 months. There's a lot of challenges here in the VC market. We've been talking about this for the last 3 months. But it seems to be a little bit more problematic than I had initially believed. And I do believe that if there are going to be challenges in the VC space, particularly in the application software and the enterprise software spaces, even including cybersecurity, if the valuations of VC companies in those spaces really pull back from 5.6 times sales to 4 times sales or 3.5 times sales, the big zombie stocks in the equity market should be reflecting that as well. So the large companies that are trading at 10 to 15 times sales and they're not profitable in this environment, they should not be justifying their current valuations, and they should be pulling back as well, particularly if we face any level of liquidity crunch heading into June, which is what I do expect, and we see a tightening of economic conditions here in the United States, which this can trigger relatively quickly.
Yeah. So I'm assuming you're going to be going through more of that at Midday Momentum and where there's some opportunities, Garrett, right?
Absolutely. I mean, this is also what we're doing over at Hyper Momentum. We're focusing on the companies trading at 10 times earnings or 10 times sales or higher on profitability and relatively high short interest in a negative momentum market. That's the easiest thing that you can do in this situation, because nobody's going to want to try to step in and bid on a lot of this stuff when the downside for these stocks can be anywhere from 30 to 40% in a process of a week and a half. So this is a very difficult time. The only thing, Mark, even though liquidity might not be a serious issue here in the banking sector, anybody making comparisons to 2008 has no idea what they're talking about, because 2008 was a true contagion. In this environment, banking has gotten boring. It is not highly speculative and highly leveraged. That may exist over in the private equity and VC space, but the banking sector has really gotten far, far more conservative. And the further you drive down into the community banks, that's as conservative as you can get. But just the threat and just the conversation about this is enough to spark fear. Markets are very behavioral, and we can see some relatively steep sell-offs as a result of this. I look at SIVB and I say, if people are going to really pull this thing all the way back, I'm willing to step in with a kind of distressed asset mindset and be willing to throw some money down on the table at $10 to $15 per share, because long-term, with a little bit of support and some reorganization, this stock's trading back up in the 150s to 180s. Can it go bankrupt? Of course it can go bankrupt, because if you pull every dollar out of the bank, which is what it seems that Peter Thiel's trying to do, then yeah, there's going to be a problem. But I just don't see the Bank of San Francisco, the Federal Reserve Bank of San Francisco, and a lot of private equity investors looking at this saying, yeah, we'll step in, we'll buy this, and we'll restructure this, and this will be a hell of a long-term play.
There you have it, folks. Garrett's vulture play of the day.
Right.
And yeah, it is. That's what called a vulture. That's called a vulture investment.